So the rally has been absolutely extraordinary. Really large gains, 40, 50, 60% in the space of 6 months. That if you look back at what's happened over the last year, you can see how we got to that stage. We had the release of ChatGPT in November. We've had announcements about heavy investment in AI from the companies. We had NVIDIA with a knockout result in May, and we've had a dawning awareness of how things have sped up in terms of generative AI. So that has captured the imagination of the public, and we've seen this incredible surge. Now, if I can make a comparison to history, if I go back to what was happening in 1999, probably the last great period of enthusiasm for tech, the differentiating feature for this year has been that the companies have been, established giants with major competitive advantages that have done well. So Morningstar has a way of establishing where the companies have a structural competitive advantage. It's an issuance of a rating called a moat, which is the popularized by Warren Buffett, the idea that you can create barriers to competition that are long-lasting, and that's really based on 5 factors. All of our company research suggests that the companies that have done well this year have a form of a moat and are profitable and have some sustainable comparative advantages, and that compares with what was happening in '99, where you had lots of speculative companies. So there is some degree of firmer foundation. Having said that, the prices have run so hard that it looks to us that really people are overconfident about their ability to forecast how AI will impact things. If I can just pause on AI for a second, if you look back at history of major general purpose technologies that have been game-changing, electricity, steam engines, internal combustion engine, computing, internet, what you find is that the effects are not predictable. They take time, and the winners can emerge in things that don't exist. So Google is a good example of that. So we think people have got carried away with that, and what it's meant is that the market in the US is very clustered around a similar theme.
If you think people have gotten carried away with that, then what happens with the ARM IPO? Would that prick the bubble, the AI bubble, the chips bubble, coming in at a valuation of $60-70 billion if it does, or would it just hop onto the bandwagon and join the frenzy?
So, frankly, that will just be determined by the sentiment at the time, because we still have the gains. I think we have the gains that are still intact from this year, from the enthusiasm of AI. That tailwind is still there. And don't forget, the economic discussion we talked about this year has meant some of the other sectors have been hit, which has contributed to these stocks leading the market gains. So I think the bigger conclusion really is around, be mindful of what you can really predict when you're paying a very high price and you're factoring in a best case scenario for a stock, and be cognizant of the fact that as the pace of technological change accelerates, that also means that you should be less confident about predicting the future and betting heavily on it and paying a very high price for things. So this is really a dangerous point for investors to be mindful of that fact, and to have diversity in their portfolios and to be valuation aware. So as we construct portfolios, that's something that we need to build portfolios to be able to handle changes in the environment, difficult and different situations. And that means thinking hard about, both the risk that you run on your fundamentals, so having things that could also handle, we could tip into a recession, so what have you got in your portfolio that can handle that? Also, what are the things that are discounted to the point where they offer good value, and therefore they're already pricing in a bad case scenario? Having things that have different drivers. Bonds, we think, are still a good thing to have in portfolios, are much more attractive than they were, say, 18 months ago. So those are all considerations for how investors can deal with this situation of uncertainty and be cognizant of just how high a price is being paid for the promise of what AI may or may not deliver for individual companies.